G'day everyone, Greg Canavan here with a Rum Rebellion update for you. It's Monday the 15th of July, recording this about 12:30 and this morning we saw the Aussie market open down quite heavily. I'm going to go through the Aussie market and the various sub-indices with you next time, but this week I want to go back and focus on a market that we've been talking about a lot lately, which is the gold market. The reason why I think this is important, I think there's some really good opportunities still in the sector, but probably just not where you might think they are. So I'm going to get into that today. First of all, let's go through a couple of the gold charts just to see where we are in terms of the gold bull market that's really kicked off in the last 3 or 4 weeks. All right, the first chart I've got for you, just an update on the US dollar gold price. Really not much to add here from the last time we chatted about this, but the reason why I wanted to bring it up is you saw that breakout in June and now you're just seeing the consolidation. So while you're seeing gold up and down by 10 and 15 bucks each day in some cases, depending on what certain central bankers come out with, all you have to really do is look at this and say, okay, the gold price is consolidating after breaking out. It might go down under $1,400 occasionally, it might pop back up close to $1,430, but the best thing you want to see here over the next few weeks to a month or two is just a consolidation around these levels, and I think that will afford you good opportunities to buy or to add more stocks on any pullbacks. It's a very similar story to the Aussie dollar gold chart, which is the next one I've got here. Once again, you saw a big breakout above $1,900 in May and June, and now the gold price in Aussie dollars is just consolidating that big move. I guess a feature to point out here is the gold price there is well above the blue line, which is the 50-day moving average. So what you want to see is that trend sort of move up, see consolidation around $2,000. Once again, I think that's a good buying opportunity for investors who are either looking to get into the gold market, to add to the gold market, or to add to the gold stocks. Now on the gold stocks, this is an interesting point. The next chart I've got here is a series or about 4 or 5 of the larger gold stocks. Saracen Minerals, Northern Star, Evolution, Regis and Newcrest Mining. Now, since the Aussie dollar gold bull market got underway at the end of 2014, you've seen some massive gains from these stocks, starting with Saracen Resources at over 1,600% since the end of 2014. So really tremendous gains there from some of these stocks. Now, the point is that I don't think, well, I think you'll still see some decent returns from these bigger miners, but the market has really priced in a lot of the upside from the good exploration work they've done and the increases in production and good cost management that these larger companies have achieved over the past few years. So where I think the real gains are going to come from in this next phase of the cycle is the smaller stocks. And when we spoke last week or the last time that I had this report, I mentioned that I've been working on a research report that I guess outlined a few of those opportunities. So in today's video, if you want to check that out, have a click on the description in the description box below, and that'll take you to the new report that I've just completed. And in that report, I've got a different angle on what could push this gold market considerably higher in the years to come. And one of the features of that, I'll bring up this next chart. It's a graph showing gold discoveries versus exploration expenditure. This is a really important chart that you're just not really seeing talked about in gold circles at all in the last few months anyway. I haven't seen it too much. This chart shows the gold discoveries, and that they're the bar charts versus the exploration budgets of gold miners, which is the darker blue line that you can see across there. The last time we had the last gold bull market saw a big spike in expenditure, exploration budgets. But as you can see by the falling blue bars there, it's not translating into gold discoveries. And what that means is that we're putting a lot of money, gold miners are putting a lot of money into the ground to look for new large deposits, and they're really not finding any more gold. which is quite concerning for the supply and the demand story. Last year in 2018, central banks bought a record amount of gold, or the highest amount of gold in 50 years. And so far in 2019, according to the World Gold Council, you're seeing a 70% increase in central bank demand on 2018 levels. So I think in the next couple of years, you're going to see a big increase in the lower supply, increasing demand story, and that's just going to be another reason to push gold prices higher. Now, what happens in that situation is a lot of the larger gold miners, they're not finding the resources themselves. They're not unearthing these big deposits. So what they're going to do, they're going to go and look for the smaller exploration companies that are actively searching for these deposits, and I think you're going to see a big pickup in takeovers. So that's the essence of the report that I've embedded for you in the description box below. So I encourage you to have a look at that, check it out, and as I said, I mentioned a couple of stocks there that might be of interest for you as well. So have a look at that, and I'll catch up with you next week, and we'll go over the market, the Aussie market then. Thanks again.